Hello friends, we are Sahas Academy. In this video, we will analyze CPI and IIP data prints and its impact on 10-year India government securities. So, let's begin. Let's start with Consumer Price Index. India's CPI for the month of May eased to 4.25% versus 4.70% year-on-year in the previous month. The fall in CPI is led by lower food inflation at 3.3% and core inflation at 5.1% year-on-year. Core inflation has surprised downside on the back of soft global commodity prices. Outlook for core inflation is favorable, as falling commodity and crude prices, on account of global growth concerns, will provide a cushion on inflation prospects. Further, if government cuts retail petrol prices, it will directly impact CPI headline numbers. Food prices may face upside risk due to delay in monsoon. Further, as per news report, Russia is considering withdrawal from the grain deal. If this happens, it will put upside risk to food prices. The government has announced increase in minimum support prices for summer crops, which is also called as Kharif crops, within a range of 5 to 10.5% and weighted average increase is 7%. Generally, pre-election year saw large spikes in MSP. However, this time, the government has refrained from large MSP spikes. Moderate increase will not have much impact on inflation, hence provide cushion to MPC to manage inflationary expectations. We believe MPC would want to see the rainfall distribution and impact on food inflation, along with actions from global central banks, before making decision on stance change. Now let's analyze Index of Industrial Production data print. India's April Index of Industrial Production, IIP, came at 4.2% versus 1.1% year-on-year in March. The data print came much higher than market expectations of 1.4% growth year-on-year. The rise in IIP was due to a sharp jump in consumer non-durables and infra growth. The rise in IIP numbers can be explained by expansion in infrastructure and consumer FMCG goods. Further, expansion in capital goods explains the upward momentum seen in industrial production. Government's infrastructure focus, improvement in rural demand, continued uptick in real estate activities, and pickup in private capex are positive for the outlook. Increase in MSP for Kharif crops will continue to support rural demand, with a downside risk due to delayed monsoon. Further, EV will data, which indicate continued resilience in economic activities despite global headwinds. However, there are some concerns on sustenance of higher economic activities in coming months due to lagged impact of the RBI's steep interest rate hikes by 250 basis points and global slowdown concerns. Our closing remarks on CPI and IIP data prints. India's domestic demand shown a recovery. This can be seen from pickup in credit growth, higher PMI manufacturing, toll collection, and e-way bill generation in the month of May. Lagged impact due to steep policy tightening by the RBI might have adverse impact on overall growth. Exports demand will continue to face headwinds amidst the fears of global economic slowdown. On inflation front, upside risk to inflation will continue to be there due to El Niño and delayed monsoon. However, soft global commodity prices will continue to be supportive for lower inflation trajectory. We believe RBI's MPC will follow long pause. Impact of data prints on India's 10-year government security. After soft inflation data, yield came down to 6.99% from 7.03%. We believe 6.97% will continue to be supportive and expecting yields to move towards 7.18% with immediate resistance at 7.08% due to higher supplies, inflation-focused central bank and resilient economic activities. Here we wrap our discussion. Thank you for watching the video. If you have any suggestion or feedback, you can reach us at info@sahasacademy.com or visit our website www.sahasacademy.com. You can also reach us through social media platform LinkedIn, Facebook, Twitter, and Instagram. To encourage us to share more videos, please subscribe to our channel. Thank you. Disclaimer: this video is made for educational purposes. It does not constitute an advice. Please consult with your investment advisor before taking any investment decision.